more than just business news, we're news for business people.
Thanks for joining us at lunch. This is Bloomberg Quint. I'm Harsha Subramaniam.
Good afternoon. I'm Ira Dugal. Let's get straight to the headlines. The Nifty manages to reclaim the 10,400 mark, led by auto companies, which are gaining for the fourth day in a row.
The Comptroller and Auditor General of India recommends deferring the adoption of FRBM budget gap targets.
Airtel makes its fourth acquisition this year, buys Millicom's operations in Rwanda.
Ola looks to go the Uber way, acquires Food Panda in an all-stock deal, also promises to invest $200 million in the food delivery service provider.
And the National Highway Authority of India has awarded only 1/10 of the total target for new road contracts in the first 9 months of the financial year.
All right, we'll get to all of that, but for a quick check on how the markets have been faring. It's been a relatively good day. Neeraj is here to take a look at some of those stocks that have managed to hold on to early gains.
Yeah, I mean, actually, the market's not quite managing to hold on, just the fact that it's about 0.2% higher. But some long positions in the bank nifty, which is the interesting bit, Harsha, because the last 3 days, the shorts got cleaned up and we were wondering whether there could be some long positions added or no. There are some fresh longs that have been added to the Nifty bank, though the levels may not suggest so, but there is some fresh long positions being added there. Stocks like SBI and ICICI, which haven't really performed in the last 1 month, just started to inch up a little bit. Though with the market fall in the bank nifty fall in the last few minutes, SBI has come back to trade marginally in the red, or actually just trading unchanged. But yeah, you spoke about specific pockets. I thought a lot of gainers. Firstly, the two-wheelers, you guys said in the headlines, everything from a Hero to Eicher to Bajaj Auto to TVS Motors, all of them doing very, very well for themselves. So good going there, good volume action as well in some of the two-wheelers. New highs for a clutch of expensive consumption names, both on the ticket size as well as the P valuations. Symphony, Page Industries, all stocks which are fairly expensive, but they're gaining traction. Certainly market, or at least the consumption basket, seems to be wanting stability of earnings as opposed to valuations. That was the sum and substance, I think, of this one. And I think a pocket to watch out for is sugar. The expectations are that sometime this week, the government will announce the scrapping of the stock limits. That's gotten the stocks excited again. This may well die down if indeed the scrapping doesn't happen. But the belief is that some point of time during this week, the government will do it. They've anyways mandated to, or said that they'll do it before December 31st. The expectations that the trading community has is that it'll happen by this week. And that should keep all of these stocks excited.
All right, Neeraj, thanks so much for that. That's the structure of the market today. More medium term, though, Indian market valuations continue to be the big concern for many investors. In a conversation with Bloomberg Quint earlier today, Samir Arora of Helios Capital reiterated this worry. He said Indian equities are a lot more expensive than some of their peers. He does not expect the market to do as well in 2018, said Samir Arora, as it did in 2017. Hear out a bit of that conversation.
India is part of a pack, which is a global pack, that equity markets in general are doing well. India is definitely more expensive than many other markets. But if the world is up, we may not necessarily need massive foreign inflows to have our market go up. We can keep it up on our own by having domestic flows, although I am a foreign point. But I mean in general that it is true that some of the Indian stocks are really wild, in their valuations, and we've not had a correction. So sometime during the year, for some random reason, there'll be a correction. But in a big picture sense, I think that if the world markets are up, we can underperform them a little bit or something like that if it has to come to that. But we won't be in a negative direction while the world is positive. We have not had very many standalone reasons to say that if the world is down, we'll be up. But we could outperform because, some of these things that we have done in terms of GST and DeMon and all, which have affected our earnings this year, having a better base effect next year will make them look better. So in general, I think we are part of a global pack and we have our own flows and some story to keep us moving without necessarily having massive foreign inflows.
although if you look at it, Samir, the global support is actually missing because it's the local liquidity driving the markets up. Now in 2018, will things change with several policy changes in US, both fiscal and monetary?
No, that's what I'm saying, that if we say, first of all, that the US tax rates being low makes the US market more attractive, it does. And it is quite attractive anyway. Even this year it has been a very good performer considering its size and everything. If you look at our large caps versus their large caps, there is no comparison. But I'm saying that if the US market is up, and even if you don't, first of all, you're not getting much flows from FIIs into the stock market. We are getting a lot of money from foreign investors into our private equity and venture cap and tech and all that, but not so much directly in the stock market these days. But if the world market is up, we have enough local money now, and of course some marginal flows from outside that will come, to keep our market tracking the foreign market. To outperform, you need 2-3 things to outperform the global markets. But that is secondary. We are happy as long as we are up 10-15% and our market is up not more than that, so that we are not underperforming, and that is okay. And then it depends on what happens to our own change of earnings and maybe more interest from FIIs. But right now I'm saying that the world market is going to be okay, I think, and we are not doing badly to be saying that we will be negative while the world is positive. So you will either trade it a little bit or once in a while outperform it if some things come together. But broadly it's good. You don't have to, and you will not make the kind of returns that were made this year. But this is an unreasonable year. I mean, this is a year where we are all making 40-45% in a fund. You're not supposed to make that much. You're supposed to make 15% and sometimes even less to have an annualized return of 15-20%. So if there are good years, there will be bad years. But I don't think it'll be a negative year in any way. It'll be a normal good year, 10-15%, and if some events come together, maybe more.
That's interesting. Samir, after a long time, I remember a conversation that we had with a couple of fund managers in office, and we were talking about this whole thesis of what if the rates go up, and if the tax rates go up and money flows out of EMs, what will happen? And both of the guys at the same time came out and said, "Ke hum hai na, hum baithe hain." It's just the confidence that the domestic fund manager currently has with the fund flow that he's getting. My question to you is then, would the change in the color of the money really bring about a change in the investment policies as well? Because until now, we've seen valuation gaps between sectors dramatically change. I think you referred to some of it in your earlier answer as well. What do you think happens in 2018? Is there a risk of some of the highly valued sectors coming off? I mean, would there be opposing forces at play? Highly valued sectors coming off a bit, and some of the underperforming economy-facing or otherwise sectors starting to move up? What's your guess?
Before that, these Indian domestic fund managers today can rightly feel confident that they are able to provide a counter force to foreigners. But a time will come when the same public will stand ahead of Indians in redeeming. Because I don't believe in a like a long term that the Indian investors are less panicky than foreign investors. I think they'll be more panicky, but not today, not now. It'll need some correction, which normally happens every 5-7 years. One correction will come, and I think it'll be a negative for our market that we have so much domestic money, but not today. I think that there is a difference in the way the Indians and foreign funds buy stocks. The foreign fund buy less mid caps, Indian guys buy more mid caps, because being based in their own market, they can't go and tell their investor that their number one holding is HDFC Bank, which I can go and tell my investor and he'll be quite happy. But an Indian fund manager telling an Indian investor that HDFC Bank is the number one holding makes the Indian investor feel like this, even I know this story and even I have this stock, so what has the fund manager contributed by basically taking my money and buying me the obvious stock of our market? And therefore the Indian fund manager has continuously to find names which his audience or his investor has not heard of, so they buy more complicated things, or they will deliberately buy some beaten up name or a turnaround name saying they are, because they have to prove themselves to a crowd which knows quite a bit more. For us it's easier because our investor is happy that we have given money to a fund manager and they don't literally have a everyday discussion on every stock that we own. So that will change, and that has changed already. But the mid-cap stocks have done well primarily because the domestic guys, for whatever reason, have this urge to discover unknown names, and some of them that they are buying, I think, are complete crap. So one day they'll fall 80-90%, and then we'll test everybody.
As candid as ever, Samir Arora there. The Comptroller and Auditor General of India, which tabled its report on compliance with fiscal deficit targets mentioned in the FRBM Act, has recommended a deferment in adopting those targets. Vrishti Beniwal of Bloomberg News now joins us from our bureau in New Delhi. Vrishti, thank you so much for joining in. What does that CAG report say?
So the 3G report, which was tabled in Parliament today, says the FRBM target should be deferred. We have a target of 3.2% of fiscal deficit this year and 3% next year. Though it's just a recommendation of CAG and the government is not bound to accept the recommendations, we should not forget CAG is not the first one to suggest a deferment or a pause in FRBM targets. Many economists have also asked for a pause or deferring the targets because, at this juncture, what the economy needs is a boost. Government can spend a little more and give a push to the economy. And that's why the recommendations are very important at this point. And we should also remember, for a developing economy like India, it's not always possible to have very stringent fiscal targets. So the CAG report will be looked at by government, and then they may take a call on whether they have to stick with the targets which were laid down in the budget or FRBM, or they want to relax it further.
Rishi, we'll leave it there. Thank you so much, Reed, for joining us with those details.
Right. Bharti Airtel has been on a shopping spree this year, and its latest acquisition is in Africa. The telecom operator has bought over Peer Millicom's business in Rwanda. So where does this place Airtel in that market? Somit Sarkar is joining us with the details. Somit.
So Airtel recently today acquired this telecom operations of Millicom, and Tigo Rwanda, that is the entity that Airtel acquired, has a revenue of close to around $60 million according to a note that ICICI Securities came out with. And this operations have a EBITDA margins of close to 20%, which brings the estimated acquisition cost to close to $60 to $70 million for Airtel. Now this is around 6 times the EBITDA of the acquired entity, and this amount is payable by Airtel over the next 2 years. Post this acquisition, the merged entity's revenue would be close to around $80 million. There would be only 2 players post this acquisition in the Rwanda market, and Airtel would be the second player with a revenue market share of close to 40%. Now, why this acquisition is important for Airtel? Because Airtel was struggling in the Rwanda market, and this acquisition could fix this problem for Bharti Airtel. And the EBITDA margins of Rwanda operations were negative, and this acquisition could change this for the company. Now, currently, the African business of Airtel is very important because it contributes around 65% to the net profit of the consolidated entity, and this is on the back of the improving margins. If you see, margins from the Airtel business have improved over the last 5 quarters from 23.1% to 32.3%.
Somit, we leave it there. Thank you so much, Reed, for joining us. 12 days to the new year, and as 2017 draws to a close, we look at some of those stocks, multi-bagger stocks that is, and kick off with Indiabulls Ventures. That stock has grown 12 times in 2017 alone. Darshan is here with some more details on what led to what's been a phenomenal stock rise. Darshan.
Okay, we started with HEG last week, and this is the second stock that we're talking about, Indiabulls Ventures. It's up almost 12 times in this year itself. So just to give a brief, it's part of the Indiabulls group. If we have it's the second largest listed entity of the Indiabulls group. The first one is Indiabulls Finance with a market cap of 51,000 crores. Then comes Indiabulls Ventures. But look at the returns, 12 times. The other groups also 3 times. So Indiabulls Real Estate, Sorrel Holdings has almost 10 times, and Sorrel Infra has 3-time return. Even the flagship company, Indiabulls Finance, has actually managed to double. So Indiabulls as a group has done well, and one of the biggest moves has come in as far as Indiabulls Ventures is concerned. Now let's get to understand what this company does. Basically, initially it started as a retail broking and wealth management business. Then it diversified into the high growth consumer finance as well as MSME lending. So pretty much the area where Bajaj Finance operates in. They also started an asset reconstruction company which they are looking to grow. It was initially part of the India Bulls group. The second, you also have gold loans in the rural and semi-rural centers. This is something that new that they have operated at. Initially, it was demerged from the India Bulls group, from India Bulls Finance in 2007, and it was a 1:1 split, but the growth has actually come in this year itself. As far as return ratios are concerned, high on ROE, close to 20%. The others are subpar, so almost 5% on return on asset. Return on capital is almost 6%, but the growth will come in that time. That is expected to improve. Valuations extremely expensive on a P basis, 65 times this year, 54 times next year. Even on an EV to EBITDA basis, it's pretty high compared to its peer. So if you do a comparative with what it operates in, India Bull trades at price to book of almost 13 times, Bajaj Finance at 5 times, which is the largest company, and Capital First at 2.3 times. So no doubt it is one of the more expensive companies in the consumer financial space. But they have been showing results. Their revenues have grown in from 376 crore that they did in FY17, and in the first half only they have done close to 320 crore. So this is expected to increase significantly. And look at the EPS. They did an EPS of 2.5 rupees in FY16. They did 3.5 in FY17, and in the first half of FY18 they've done 2.5, which is expected to exceed what they did in the last 2 years. So they've been showing revenue, and what has actually changed is the growth in the consumer finance business. So from a revenue of 3.8 crores in the third quarter last year, they've managed to grow it to almost 90 crores in the second quarter. So they have actually focused significantly on the consumer lending space, which has actually got them the revenues. The other factors that you have to watch out for, what works in favor of India Bulls Ventures, is the fact that it is now actively participating in the growing consumer lending business, the business which Bajaj Finance has grown, and it gets it multiple. They had this app called Dhani, which aids in faster disbursement. So it's one of the only companies that has an app. So you don't need to go to a store. You can get with your Aadhaar card, you can get a loan from the company, and immediately they will tell you whether you will be applicable or eligible for a loan or not. That is there. Aggressive brand campaigning that they've done. They've roped in MS Dhoni as their brand ambassador, and they're doing a lot of advertising. So that is where they're getting revenue. Recently, it was added to CLSA's greed and fear model portfolio with a weightage of 3 percentage points. So there seems to be some bit of FII interest also that is coming in. Cash and investments of almost 2,900 crores. So the market cap is 10,000 crores, 11,000 crores, and cash on the books is close to almost 3,000 crores. Obviously, there are some risks that are involved. First of all, the competitive landscape is very, very large. So what they can do, even a Bajaj Finance can do that app and go for customers. And secondly, valuations are extremely rich. One of the most expensive NBFCs in the country currently. So that is what it works. But no doubt value creation has been there. It's moved up almost 12 times in a matter of 1 year.
Darshan, thanks so much for that. That's the multi-bagger series here on Bloomberg Quint. Moving on, the Modi government has miles to go to achieve its annual road building target. The National Highway Authority of India aims to tender 10,000 kilometers worth of contracts in the current financial year, but so far NHAI has awarded only a little over a tenth of that. Dhwani Pandya of Bloomberg News is joining us with more details. Dhwani, what have you picked up?
Yeah. So the main problem which government is facing in meeting this target, first of all, it's a very ambitious target. If you see, last year their target for awarding roads was 15,000 kilometers, although it is far lesser than that. But the main issue they are facing is land acquisition. There are significant delays in land acquisition. NHAI is not awarding road projects unless and until 80% of land is acquired. Another major reason that delayed bidding this year was implementation of GST for from July, and that had to, the bids had to be reworked with the new tax numbers, and that delayed the entire bidding process.
Do we know from now to the end of the year or end of the financial year what kind of targets are they working with?
So NHAI has officially said that by December they would be awarding around 8,400 kilometers of bids. They would be inviting bids worth of 8,400 kilometers, but it's just 3 months to go now, and So let's see if they are able to actually meet the target. Analysts are expecting that they may not be able to achieve this target, but they could do probably around 6,500 kilometers because order awarding pace is generally very good in the last quarter. So they should be able to give orders worth around 6,500 kilometers.
All right. Thanks so much for that, Dhwani.
Thank you.
Let's move on now. As Indian banks slowly shift towards Basel III capital adequacy norms, state-owned lenders like Punjab National Bank, Syndicate Bank, Union Bank tap the financial markets to raise equity capital. This is part of the overall 2 lakh crore recapitalization announced by the government. To discuss how this improves the credit profile of the banks, let's welcome in Srikanth Badlamani, Vice President of Financial Institutions Group at Moody's Investor Services. Srikanth, thank you so much for joining in. What have you made of these three guys going out to the market to raise money? And how does it change the credit profile in your view?
Well, it's a clear credit positive on two counts. One is, of course, the direct fact that the CET1 ratios will go up. I think our estimate says that it will go up in the range of 70 to 100 basis points. So that in itself is an obvious credit positive. But the bigger message is that finally these banks seem to have regained some sort of access to the capital markets. And that was what was lacking for the last 4 years. Over the last 4 years, I think all these banks had plans to raise capital from the equity markets, but they were unable to do so. Now they are able to access capital markets, and that's a significant positive.
Srikanth, good afternoon. Ira joining in as well. Actually, that second point is the more important one, right? I mean, so the banks that have gone, PNB, Union Bank, Syndicate Bank, among them, PNB has a high, gross NPA ratio, as does Union Bank. So it looks like, the market is willing to accept the equity paper of these banks, perhaps backed by the fact that there is recapitalization money coming.
Absolutely. So the names, so for example, the three banks that have raised the three names that you're talking about, on a standalone basis, their credit profile is at BA3. So they're definitely not the weakest banks that we rate, but they're definitely not the strongest banks as well. So the fact that they have been able to access capital markets shows that as a group, the public sector banks seem to have regained some sort of access to the capital markets, which is a significant positive in the way we look at it. And definitely, I think that the recapitalization plan announced by the government has played a factor in this, because now probably the market knows that there is a backstop as far as capital is concerned, that there is a promised amount of capital that is coming in. So that, I would assume, would have played a major role in enabling the success of this QIPs.
The access to capital that you talk about, that coupled with the government's own recapitalization plan, would that solve the problems of individual banks mostly?
I would think so. Now the only missing piece in this puzzle is a sort of hits or the write-downs that they have to take in the NPL cases, which are now in the NCLT. So that is one missing part of the puzzle. But under reasonable assumptions, I would think that the capital that the government has said it will infuse in, plus this access to capital markets, should solve the problem. The other issue, of course, is that while the government has come up with a consolidated number, it hasn't come out with the number for specific banks. So that is another puzzle, but we would assume that all the public sector banks, all the rated public sector banks at least, will get a minimum amount of capital so that they are in compliance with the Basel III norms.
Exactly, Srikanth, because all the comments that have been coming out both from the government and from the Reserve Bank of India as well are suggesting that this capital infusion is going to be perhaps linked to some sort of reform. Some comments have suggested that those who have actually cleaned up will get the recap bonds faster. I would have actually thought that if they went to the capital markets without getting that clarity, investors may be nervous, but clearly I was wrong.
Yeah, you are. Maybe you are. But I think if I take a step back and think through that, I think, in the past, at least in the public statements, the government has differentiated between two forms of capital. One is what is the base level of capital, and the other is the growth capital. So even now, while we have been reading the same statements that you have been quoting from the government, I would be very surprised if even the weaker public sector banks don't get the minimum base capital, which is required for them to meet their capital norms. So in terms of growth capital, maybe the government will pick winners and choosers and say that only certain number of the capital should only go to a certain number of banks, which can in turn support growth. But as far as ensuring that everybody is compliant with the minimum norms after accounting for the sort of hits that they have to take from the NPL issues, I would be very surprised if any of the public sector banks is left out in the lurch.
In your report, you mentioned Punjab National Bank, Union Bank and Syndicate Bank as having raised money from the market. Who do you think is most vulnerable outside of these three?
Well, if you look at our rated universe, we rate 11 public sector banks. The weakest on a standalone basis within our rated universe is IDBI, which has a standalone, what we call as a BCA, which is a measure of the standalone credit profile. We have that at CAA1, followed by two banks, IOB and Central Bank of India at B3. So within the rated universe, these would come at the lower end of the credit profiles.
Shrikant, a quick question on the broader banking space. I'm not asking for specific credit opinion, but actually a whole host of banks have managed to raise equity capital even in the private space. So we've got most of the big ones having raised capital. HDFC has a board meeting. HDFC Bank has a board meeting coming up in the next couple of days to approve a capital raising issue. Where do you think that leaves the banking sector? Would it be fair to assume that it leaves it well positioned to perhaps capitalize on an uptick in credit growth next year should it materialize?
Sure. I think from a capital perspective, there was always a divergence between the public and the private sector banks. Private sector banks although some of them were facing asset quality issues, they had no issues as far as capital was concerned or access to capital was concerned. And that access to capital is something that is being demonstrated as you're talking about. Now, for the public sector banks, that was a big issue, and we think that the big bang recap plan announced by the government has addressed it to a significant extent. So as far as the banking system being in a position to support any potential uptick in credit demand, we think the banking system is fairly well positioned for that. Again, the caveat here being is that we don't see any imminent pickup in credit demand, but as and when there is a gradual pickup in credit demand, we don't think the banking system, we don't think there will be supply side constraint as it would have been in the past before the government announced its recap plan.
Shrikant, we'll leave it there. Thank you so much, Nidhi, for joining us with your views. Shrikant Badlamani from Moody's talking about the capital raising by a few public sector banks and what that means for their credit profile. Up next, who are the real winners and losers of elections in state elections in 2017? Raghav Behel weighs in.
सर ये नया प्रोजेक्ट ना डिफिकल्ट लग रहा है।
हाँ क्या?
नए प्रोजेक्ट की बात कर रहा हूँ सर।
नहीं वो वर्ड।
सर प्रोजेक्ट।
चेकबुक देना। क्या?
डिफिकल्ट सर।
डिफिकल्ट क्या होता है?
सर आपने पहले कभी डिफिकल्ट नहीं सुना?
ये सुना होता ना तो आज तक मैं समोसे की दुकान पे समोसे बना रहा होता। ये फैक्ट्री खड़ी नहीं करी होती मैंने ये। मैं वही सुनता हूँ जिससे मेरे इरादे मजबूत होते हैं।
जब आपके इरादों में कोई लिमिट नहीं है तो हमारे सपोर्ट में क्यों? आपके अनलिमिटेड पोटेंशियल के लिए एडलवाइज SME बिजनेस लोन्स बी अनलिमिटेड।
Are we live?
Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
First Business News, where news for business people.
Back on lunch, the headlines at this hour. Nifty and Sensex hold on to gains. Two-wheeler makers like Hero and Eicher lend support.
Brokerages expect the government to turn their focus to the rural economy after a slimmer margin in the Gujarat election victory.
The CAG recommends deferring the adoption of FRBM budget gap targets.
And Ola looks to go the Uber way, acquires Food Panda in an all-stock deal, also promises to invest $200 million in the food delivery service provider.
All right, quick check on how the markets are faring at this point. Pradeep is here with some of the key movers and shakers. Pradeep.
So markets are holding on to the early gains. If you look at mid cap and small cap, they are doing better than the large caps as usual. So it looks like there was a big uncertainty in terms of election, which is beyond us. And now market is trying to figure out what to do next. So all those who had hedged their positions are squaring off the option-based strategies and hedges, and therefore VIX has fallen further, which is also giving comfort to the buyers. And what are they buying? Trying to guess what would government do. You have all the FIIs writing reports on where would the priority be, and everyone kind of agrees that rural is the way to go. So there will be more rural spending. So you should buy maybe Hero Moto. That stock is kind of leading the auto sector today. In fact, M&M hit a new high yesterday itself. Some more interesting stocks in auto segment would be Motherson Sumi, which has done well. There is also an uptick in New India Assurance. After a long time, actually, this has been disappointing the investors since listing. But looks like there could also be some focus on rural insurance. So New India has benefited on the back of that. Then you have REC, which is doing well. There are talks of some kind of additional assignment that this company could get, other than the rural electrification, which would in itself be an interesting theme. Then you have Gen Irrigation and Gen Irrigation DVR doing well. So that seems to be the theme today. Also, some more movers like Godavari Power and Prakash Industries on the back of some cut down in the raw material supply for steel companies going forward, and a price hike that might follow. There is an FII report also on this theme. So these two stocks have benefited on the back of that, and a lot of companies are raising funds. LT Food is one a key stock which is out with QIP, and the stock has in fact gained, although the QIP base price is at least 5% below the current market price, but market is taking it positively.
All right, thanks so much for that. That's the structure of the market. 2017 has been a great or a rebound year for global commodities. But as we head into the new year, commodities have come off their peak. It's been quiet trading for the last couple of days as you're getting into the end of the year. Let's get a sense of what the crude markets have looked like and what we could expect once the new year picks up. Azlin Ahmed, editor crude oil markets at Argus Media, joining us on the phone line. Azlin, good morning. Thanks so much for taking our call. Let me just first start with what last few days have looked like. It's been fairly quiet trade. Is that just sort of year end, everyone going off for holidays? Anything notable in the market so far?
No, actually, I think that we saw that the prices did go up when the news of the North Sea Forties pipeline was shut down. And then after that, the market calmed down because I guess there was just a easing of worries about supply. So I think that right now, the market will be looking at very short-term direction, and that will probably be things like the U.S. stocks and where the U.S. production is going to be. So I don't think at this point there's nothing major that's expected in the market. And I think the main thing is that the market will watch for news on when the Forties pipeline is expected to come back up, because I think that will be the key to driving the oil prices.
It's been a roller coaster year for oil prices, Azlin. We've moved up nearly 40% for Brent from those levels in the month of June. What would be the key triggers in 2018?
Well, I think that the main thing that could determine price direction would be compliance to the OPEC cuts, because they have made the decision to extend to the end of the year with a June review. But that's just an agreement, and I think that ultimately it will be whether the producers do stick to the output cut deal. And I think in 2017, overall, apart from a few months when they were producing quite high, generally the OPEC and non-OPEC producers led by Russia were quite restrained in their production, and Saudi Arabia was leading the pack in terms of keeping output low. So I think that was the main factor that allowed inventories globally to decline. And we also saw demand quite strong. Demand in 2018 will still be firm, but there is also the threat of U.S. output growing. So, I mean, our view is that OPEC really needs to keep its output within its agreement if it wants to see the stocks continue to fall and prices hold quite steady.
Just a question about, you alluded to U.S. stockpiles. Many people have argued that this has been the year of rebalancing of oil prices. Do you expect U.S. stockpiles to fall further from these levels? Is that going to be as an important factor as OPEC curbs being reduced?
I think that in a market where if it's where there's no major activity or no news breaking, the market tends to look towards the U.S. stockpile data, the weekly stockpile data, as sort of direction or indication of where supplies are. So I think that we should see stocks probably. I mean, it's hard to say. I think the one thing is that with U.S. ability to export crude, that may continue to reduce the U.S. stocks because if they build too high and it puts pressure on the U.S. crude prices, then there is an incentive for export, and that will pull down the stock. So we should see stocks, continue to come down in 2017 in the U.S. and also globally, but led by demand and led by OPEC.
Azlan, we leave it there. Many thanks indeed for joining us with your views. That's oil for you. It's been, as I said, a fairly roller coaster year for oil prices that have moved up 40% from in June. Brent is now trading at that 63, 64 levels. The BJP, meanwhile, retained Gujarat and has won Himachal Pradesh from the Congress. The party and it's been a phenomenal ride for the BJP yesterday in its allies that will rule 19 of the 29 Indian states. The Modi magic, however, may have lost some of its sheen. The BJP ended with a tally of 99 to the Congress's 77, significantly lower than the 115 that Modi won in 2012. So who are the real winners and losers of elections in 2017, state elections that is, and what are the learnings for national elections in 2019? Let's start off with Quintillion Media's co-founder and chairman Raghav Behl's take on the election results.
So this is a 6 crore question. Who won the Gujarat elections? Well, electorally, clearly the BJP will form the government. But was the elections a psychological upper for the Congress? Now, I've called the outcome quizzically inscrutable in my piece. But there comes a moment in politics when it is the resurrection moment. We saw that with Mrs. Indira Gandhi in 1978. We saw that with VP Singh in Allahabad. These elections turned the politics of the country. We saw that this year in the UK when the Labour Party came out of nowhere to reassert and become a strong opposition to the Conservatives. I suspect something similar has happened in the Gujarat Assembly polls of 2017. Here's my first take on the Gujarat elections. Rahul Gandhi actually took on Prime Minister Narendra Modi, who is a colossus in Gujarat. He is an iconic leader. He's a Gujarati. He took him on in the lion's den. He could have stayed away. But fortune often does favor the brave, and by taking him on, by actually getting him to reduce his awesome majority that he got in 2014. Remember, he got nearly 60% of the vote and he got nearly 160 assembly seats. Against that, the vote has fallen to about 49, so he's lost about 10 to 11 percentage points of the vote, and he's lost almost 60 to 70 assembly constituencies. So Rahul Gandhi had the gumption to go into the lion's den and to challenge him, and in this instance has come away with what I would call is a reasonably rejuvenating outcome for him and his party. My My second take of the elections is that when BJP won that spectacular UP election about 8 or 9 months back, people thought that that was the trend. People said that the way the BJP is going up, it's game, set and match in 2019, it's all over. But I even remember at that point in time telling my editors that I don't think the UP elections were a trend. I thought they were a peak. And I think the Gujarat elections sort of proved that point, that up until then, the BJP had been fighting in states where the BJP was the underdog, and it had the terrific tail whirlwind of the Modi win in 2014 to get it across. And it did that in state after state, in Maharashtra, Haryana, UP, Uttarakhand. It did that. But with UP, that run had come to an end. It is now going to be fighting in states where it suffers from a double incumbency disadvantage. And that really is my third take from the Gujarat Assembly elections, that now the BJP will suffer a double incumbency disadvantage. And therefore, look at the trend of some of the polls. And I'm going to mix up local student elections, municipalities, panchayats, by-elections. Look at Punjab, look at Goa, look at Chitrakoot, look at the Dusu elections in Delhi, look at the UP local polls, which finished just a few weeks back. In all of them, the BJP has lost significant vote share and number of seats. What that shows is that as the double incumbency disadvantage sets in, the Congress could move in for the kill. It could move in for the kill in some of the key elections coming up. For instance, there are by-elections coming up in Phulpur, Gorakhpur, Ajmer, Alwar, in Bihar. In all of that, the opposition could have an upper hand. Also remember that there are big assembly elections coming up in Rajasthan, Madhya Pradesh, Chhattisgarh. In all of them, the BJP suffers a double incumbency disadvantage. And remember now, with the Congress's seen resurrection in the Gujarat Assembly elections, it possibly will be able to garner more funds and resources from friends and well-wishers and donors. So therefore, let's get ready for a strong political battle, a string of them in 2018. My fourth takeaway from today's Gujarat elections is that demonetization and GST, which the BJP and Prime Minister Modi in particular had been spinning as an extremely successful political move, I think that's beginning to bite now. Remember, when demonetization happened over a year back, people suffered, but people suffered willingly because they thought that Prime Minister Modi was doing something which was very noble. He had brought the rich to their knees. It was a terrific anti-dishonest move, and people supported it completely. But when that got combined with the problems that have been there in the GST rollout, actually it's a botch up, the GST rollout. When you put the two together, it's really beginning to bite, and that reflects in the vote in Gujarat. Remember, in Gujarat, in places like Surat, where there was a lot of dissatisfaction, Prime Minister Modi could pull in his Gujarati credentials and still neutralize a lot of that anger. But some of that strategy is unlikely to work in the rest of the country. My fifth takeaway is quite straightforward, actually, that now with the Congress having resurrected itself quite a bit in Gujarat, it will necessarily become the fulcrum of opposition unity. Rahul Gandhi, who until now perhaps a lot of senior politicians in the opposition were not taking as seriously as they would take his mother, will now be forced to take him that seriously, will be forced to listen to him as the fulcrum of opposition unity. And opposition unity is an imperative if the opposition wants to make a mark in the 2019 poll. So therefore, a broad alliance between the Congress, TMC, DMK, BSP, SP is something that is imperative. And finally, although I thought I would give 5 takeaways, I'll give a 6th one. This is unsolicited for the Prime Minister. The Prime Minister must remember that the reason he won such a spectacular victory in 2014 was because he pivoted to the center. He got about 5 percentage points of the core Congress vote which moved to him. Remember, in about 15 years, from 1999 onwards to 2014, roughly 50% of the vote went to the BJP and Congress together, and an average of 25% apiece to them if we average out over the polls. But in 2014, Prime Minister Modi got 30% plus and the Congress got 20% minus. So 5 percentage points of the Congress, the moderate Congress vote had moved to Prime Minister Modi. Now, if he does not repivot to the center, if he continues to indulge the right fringe, then I'm afraid he's in danger of losing a bit of that 5 percentage points of the vote. And if it does indeed become 25% apiece in 2019, then the race is wide open.
All right, now one of the things that has happened in the aftermath of the Gujarat verdict, particularly from the market analyst community, is of zeroing down on the Saurashtra region and the performance of the BJP in the Saurashtra region. A lot of people have said that that is a region which is heavy on farmers, and perhaps the losses that BJP has faced in that region suggest that the real problem is coming in from the agrarian economy. The eventual sort of conclusion that a lot of market analysts are coming to is that following this election verdict, perhaps the government will focus on farm sector policies in the next budget. Is that whole story too sort of simplistic? Is that analysis and understanding too simplistic? Joining us on the phone line to help us get a slightly deeper understanding is YK Alag, noted economist, former union minister. We've also been lucky to have him write for Bloomberg Quint on the issue of farm sector stress. Mr. Alag, thanks so much for taking our call. Sir, I want to put that narrative to you and ask you whether you buy it, sir, that the losses in Saurashtra are linked to the stress in the agrarian economy, and perhaps that should get the government to focus on the farm sector in the next budget. Do you buy that story, sir?
Yes, I think there is a lot in that. You know, the agricultural sector in Gujarat generally and in Saurashtra in particular has been going through a rough time since in fact, since the demonetization. You know, for example, one of the things that was done in the demonetization was that cooperatives were not allowed to exchange the old notes for the new ones. Now, the Reserve Bank, of course, you know, has this notion that, which I think is to a large extent correct, that the cooperatives in many parts of the country are run by goons, and therefore they didn't want them to become a vehicle for doing laundering. But, you know, in Gujarat and in Maharashtra, cooperatives are actually solidly there. And, for example, working loans, the primary agricultural cooperatives give you working loans. Now, in November last year, when the farmers with the Kharif crop was coming in, all of a sudden credit for first stage processing, you know, Maharashtra, Gujarat agriculture, Saurashtra agriculture is highly commercialized. Oil seeds, dairy products and so on. And so you need first stage processing. Once the crop comes in, you need money to process it. And that, the cooperatives were blocked out. Again, for the next Rabi, they were not getting the working capital loans. So the problems start from them. Then this year in the Kharif, we had late rains. Now, some or the other, you know, Krishi Bhavan kept on saying, oh, this is pretty good because, you know, late rains means that instead of paddy, they'll be growing oil seeds. But the farmer wants, you know, wherever, for example, he has Sardar Sarovar water, they want to grow paddy. They want 6 tons of paddy because we grow very high yielding or very high quality rice or wheat. The famous Bhalia Gaon or the Jirasar rice, which fetch you a very good market price. And the fact that you were not able to grow it also meant that his income goes down. So basically what is happening is that the terms of trade are moving against agriculture by, let's say, about 5 percentage points. And so while everybody else's income is rising by 10% every year, in the last 2 or 3 years, the farmer's income has been relatively going down. So, I mean, there is this genuine feeling. I mean, I travel a lot, go and sit in a chowpal, get a cup of chai. They are very hospitable people. They have a genuine sense of resentment. And I think it showed up in this election. And Rahul was able to sort of link up with them on a lot of this. We will do it. We will give you a better price. We will solve your problem. You know, he kept on saying some of these things. Maybe he read even some of the stuff we had written in the Quint.
Mr. Alec, just to sort of push this point a little further, the rise of leaders like young leaders like Jignesh Mevani, from a Dalit leader who's talking about the issue of joblessness, of and lack of viability of farming. What does that indicate? And I'm assuming this is not just restricted to Gujarat. This is a nationwide problem, isn't it?
No, but in Gujarat it is very special. You see, you look at the jobs issue. We've got a pretty rotten education system. Now, most of the political parties in Gujarat, this is the old Bombay University pattern of education. One more college means one more member in the Senate. So the political party controls education. Now, that kind of education has its time is over. So what happens is that when there is a commercial agriculture like in Gujarat, and there are many jobs which are possible. I mean, we can have, why should there be only one Amul? We can have 50 Amuls in Gujarat. Now for that, so if in an Amul, a Patel boy gets 25,000 rupees per month, if there are 10,000 such jobs, then I think the Hardiks and the Mewanis' life would have been different. So what they see is, they go to colleges where you pay pretty hefty sums of money, 1 lakh of rupees or whatever, and the jobs go to the outsiders, the boys who come from Karnataka, from Kerala, from elsewhere, because they've got better education systems. We literally starved the universities in Gujarat. And the idea was that private education would take care. Well, private education of certain kinds, doesn't meet needs. There are private colleges and there are private colleges. And these ones which are run by political parties are of a pretty useless nature. So what is happening is that resentment is building up. In a fast-growing economy, the jobs go to outsiders. Your own boys get into trouble. So that is really calling, instead of a demographic dividend, we are seeing a demographic disaster.
Mr. Alak, sorry, I want to come to a slightly more immediate question, and I know you've written extensively on, the terms of trade and how they're shifting against agriculture, and perhaps those are issues which, need to be delved deeper on. But one thing that, obviously, gets quickly mentioned every time there's farm sector stress is that maybe MSPs need to rise quicker. And, predictably in today's brokerages reports, a lot of people have talked about that MSP factor. Where do you stand on that, sir? Because, it's a double-edged sword.
I think this MSP business is vastly overdone. Listen, MSP is all right in Punjab and Haryana because those are states which produce largely rice and wheat, and there is so much. The Punjabis and the Jats don't eat rice, so they put it into the central kitty. But a place like Saurashtra or Gujarat, South Gujarat agriculture, our agriculture is highly diversified. It is into pulses, it is into oil seeds, it is into fruits, it is into vegetables. Now, what you need is a well-modulated tariff policy. Just before the marketing season, you will introduce imports of pulses. You will introduce imports of oil seeds because you're worried about the pressure from the towns. The oil price is rising. Now, the farmer, what has he done? When the dal price was 200 rupees a quintal, he sold it. The MSP is 120 rupees. He really feels cheated because he wants 180 rupees at least. Yeah. So really it is tariff policies, it is improvement of markets. There is so little investment that goes on.
Right.
Into better infrastructure. You should see the way markets are. Our people go and sell, and in many cases, the farmer who sells is a lady, they literally sell on the road. These are not the so-called APMCs. They don't go there. The market for vegetables, for fruits is not the APMC. They go to the towns where the income is, because income is rising fast in Gujarat. So there you have no infrastructure. Now I've seen a lady, I'd gone to a farmer producer organization, And these women were producing fruits and they were selling them at Surat. Somebody was giving them a high price. This was in Kheda. But I've seen the next day coming out and a lady farmer on the road has been hit by an SUV. So that is what the bazaars are in India. You put up your thing out on a road. We are really not creating the infrastructure with which we have a very big spread of markets.
Right.
But not the positive infrastructure with which these people really feel that they are a part of the growth process.
Sure.
So this is the problem. There is not enough of it. All your smart cities, you tell me, does any one of the smart cities have a provision for a smart market?
Sure. So this is a fascinating conversation. We can take this forward. I'm afraid we completely run out of time. Many thanks indeed, Mr. Alag, for joining us with your views. That's Yogendra Alag, former Union Minister, who's written a piece extensively talking about the ground reality. But let's shift focus now to the new economy. Ola is looking to go the Uber way. The country's largest cab aggregator will be acquiring food delivery company Food Panda's operations in India just months after it was launched in the country. Nishant is joining us from Bangalore with some details of what Ola is trying to do. Nishant.
Right, Harsha. So Ola has acquired Food Panda's India's operation in an all-stock deal. Now, Ola's venturing into food tech business comes, nearly 7 months after Uber launched its food delivery business, Uber Eats in India. Now, this is not the first time Ola is trying to try its hands on the food delivery business. 2 years back, it launched Ola Cafe, which it had to shut down nearly after a year. Now, Ola said that it's going to invest about 200 million to scale up operations in India. Saurabh Kochar, who was the CEO of Food Panda India, will move out and to pursue other possibilities. And Pranay Jivrajka, who was this founding partner at Ola, will be the interim CEO of Food Panda's India operation. Now, food delivery business, till this point used to consider it as a game between Zomato and Swiggy. Now with players like Ola and Uber coming into foray, we might see a new set of discounting war also coming into the food delivery business in India.
All right, Nishant, thanks so much for that. That's a quick take on that story. It's up on bloombergquint.com for greater detail. Do go ahead and read that. That's all the time we have on lunch. Thanks for watching.
Countdown is up next.
सर ये नया प्रोजेक्ट ना